Let's jump right into this explainer. Imagine a scenario where just a handful of words from the most powerful office in the world can instantly ripple through financial markets and, well, ignite massive political firestorms. Today, we're looking exactly at that intersection. We're going to explore how presidential influence, lightning-fast stock market reactions, and the inevitable ethical debates that follow all collide. It's this incredibly fascinating dynamic where politics and finance are literally bound together in real time.
Okay, so picture this. On July 6, 2026, President Donald J. Trump said a simple yet totally unprecedented sentence right from the Oval Office. He said, "Go and buy a Dell computer. We're going to get him that money back one way or the other." That single endorsement unleashed an absolute wave of market activity and intense media scrutiny. So we're going to unpack exactly how one sentence can carry so much financial weight and the domino effect it triggered across both Wall Street and Washington.
Here's how we'll break it all down today. First, the Trump account's launch. Then, the Dell stock surge. Third, the science of market reactions. Fourth, ethics, contracts, and conflicts. And finally, the broader political debate.
All right, let's get into Section 1, the Trump account's launch.
Think about this for a second. Right now, 38% of American families have absolutely zero exposure to the equity markets. They miss out entirely on the compound growth that builds lasting generational wealth. To change that, this new policy initiative is trying to create what's called an ownership economy. Created under the Working Families Tax Cuts Act, the whole program gives every child a tax-advantaged path to build that wealth. And the kicker? It's totally free to open for every single U.S. citizen under 18. Plus, for babies born between 2025 and 2028, the government actually steps in with a $1,000 automatic federal seed. The ultimate goal here is to get that 38% number down to absolute zero, offering early stock market exposure for everyone, especially folks from lower-income families.
Now, to really supercharge this launch, philanthropists Michael and Susan Dell stepped in with a staggering private seed donation. $6.25 billion. Yeah, billion with a B. This was a massive public-private partnership, and it definitely wasn't just some quiet background transaction. This monumental contribution actually brought the CEO of Dell right into the Oval Office. It essentially set the perfect stage for the president's very public endorsement of the company, which, as you can guess, really started blurring the lines between federal policy rollouts and major corporate visibility.
Which brings us to Section 2, the Dell stock surge.
Okay, here is where the timeline gets genuinely interesting. Financial disclosures revealed that well before the launch event and way before that Oval Office endorsement, the president had actually taken a significant multi-million-dollar personal position in the company. Specifically, back in the first quarter of 2026, disclosures show an investment of somewhere between $1 million and $5.1 million in Dell Technologies stock. What that means is he was already heavily invested in the company's financial success long before urging the nation to go out and buy their computers.
Predictably, the market reaction to all this was immediate, and it was forceful. Institutional and retail buying surged right alongside that Oval Office endorsement, completely pushing Dell's stock above its 20-day moving average. Now, if you aren't staring at stock charts all day, the 20-day moving average is just a key technical indicator. Breaking above it basically shows massive, sudden upward momentum and really strong buying interest. Dell was honestly already doing well scaling its AI server revenue, but this high-profile backing provided a massive psychological and structural tailwind, practically driving the share price significantly higher in just a matter of hours.
Let's move on to Section 3, the science of market reactions.
To prove this isn't just some isolated incident with Dell, we can actually look at the empirical data behind how presidential statements consistently move markets. A 2017 study from Skidmore College analyzed these statements and found they objectively drive massive, immediate spikes in both trading volume and volatility, even if the actual price effects are kind of temporary. The researchers looked really closely at company-specific tweets, and get this, they found that on the exact day the president mentions a publicly traded company, investor attention rockets up by a staggering 51 percentage points. At the very same time, trading volume jumps 47 percentage points. So the data is incredibly clear here. When the president speaks, the market listens, and it trades, almost instantly.
We have a perfect example of this phenomenon in past data. Take Toyota's U.S.-traded shares, often called ADRs, back in January 2017, for example. Following a specific presidential tweet regarding the automaker, there was an immediate, sharp drop in the stock price, coupled with an absolutely explosive spike in trading volume. You can literally trace the shockwave minute by minute. A statement goes out, algorithms and human traders react in milliseconds, and billions of dollars in market value shift before the news cycle has even caught up.
All right,
Section 4. Ethics, Contracts, and Conflicts.
So when you piece the whole sequence of events together, a very clear picture emerges, one that instantly sparked intense watchdog scrutiny. The timeline starts with a personal stock purchase in February of somewhere between $1 and $5 million. Fast forward a few months to July 6th, and we get a globally broadcast product endorsement right from the Resolute desk. Then, following that, the Pentagon awards a massive $9.7 billion contract to that very same company. Moving from a personal investment to a public endorsement to a major government contract, well, it creates a highly complex ethical collision that Washington immediately had to grapple with.
Which brings us to our final part, Section 5, the broader political debate.
As you might expect, this situation has completely fractured political commentators across the aisle. On one side, critics allege unprecedented corruption. They argue the timeline reflects direct White House intervention, basically allowing the first family to profit by directing highly lucrative government contracts to companies they own shares in. To them, the president simply shouldn't enrich his own portfolio using federal power. But on the flip side, defenders point out that Dell has a decades-long relationship with the Pentagon and is objectively the best manager for these complex government systems. They also highlight that this specific contract actually saves taxpayers $400 million. Furthermore, they note that politicians across the entire political spectrum, like Nancy Pelosi, have historically held and grown massive stock portfolios while in office, arguing that this is just standard political practice, not some new ethical breach.
And, this debate also extends to the broader first family. Take the recent controversy over a rare earth mineral startup known as Vulcan, which was backed by a capital fund linked to the president's son, Don Jr. Just 3 months after that initial investment, the Pentagon awarded the startup a staggering $620 million loan. Critics immediately labeled this cronyism, citing reports that the White House actually pushed the Pentagon to secure the deal. However, the defense establishment and political defenders insist that building an American rare earth supply chain is absolutely a critical national security priority, especially to counter China's dominance in the sector. They argue the loan was just a strategic necessity, regardless of who holds the private investments.
When the megaphone of the presidency meets the lightning speed of modern stock trading, the rules of the game inevitably change. We've traced the data, mapped the timelines, and examined the political fallout surrounding these massive federal contracts and personal investments. But it all leaves us with one overarching, really provocative question to ponder. Have the incentive structures of modern democracy fundamentally shifted, blurring the line forever between public policy and private financial gain? Thanks for joining me on this explainer. See you next time.